Hello, my friends in Vermont. Let's talk about state tax savings. How can you cut that Vermont state income tax bill? I got 5 ways you need to be aware of to make sure you're not leaving money on the table. Number 1, it's the Vermont Earned Income Credit. And this basically follows the federal Earned Income Credit. So it starts off, if you qualify or are eligible for the federal EIC, you are eligible for a 36% Vermont Earned Income Credit. Now, the beauty of this is a fully refundable credit. So even if you don't owe any Vermont income taxes, you can still file and receive this credit, money coming right back to you. Now, this is designed for low to moderate income families, and the eligibility, as it is on the federal, is based on income, filing status, and the number of children that are your dependents. Number 2, Child Independent Care Credit. This is similar in its process and how it flows through on your Vermont return. This credit is 72% of the federal credit. So if you qualify for the Child Independent Care Credit on your federal return, you're going to get 72% of that amount as a credit on your Vermont taxes. So this is designed to help parents with childcare costs so that you can get to work or seek employment. Let's talk about number 3, shifting gears a little bit from working families to Social Security benefits. So Vermont has a threshold. It doesn't tax all Social Security benefits, but it doesn't not tax them either. You have to meet an income threshold. So if you're married, if you're married and your AGI is less than $75,000, then Vermont isn't going to tax your Social Security benefits. And if you're single, it's $60,000. So it's a generous threshold for having other income to then make the Social Security benefits not taxable. But there needs to be a little calculating involved to see if you qualify for this exemption, basically exemption of taxability for the benefits. All right, shift into businesses. Number 4, the R&D credit, Research and Development Tax Credit in Vermont. So this is on the Vermont side, is you're going to get a 27% Vermont income tax credit for R&D expenses. So this is going to encourage, the idea of this is encourages innovation and improvements and investments in Vermont's economy. So the unused credit, let's say you take this credit, or you're in the building phase of your business and you don't have a lot of income, but you're using this credit because you're trying to build it up. You can roll this credit forward, carry it forward up to 10 years. It gives you a chance to use it all up as you move forward with your business. All right, and number 5 is my favorite, is the Vermont Higher Education Investment Plan. This is a 529 plan where you can save for your children's or your grandchildren's or basically anybody's. It doesn't really even matter who the beneficiary of the 529 plan is. You get a credit based on your contributions. And this is a 10% annual credit. Now there are certain limits and restrictions apply. I get that. But look into this. If you have a child or a grandchild or somebody you love that is looking at college costs down the road, set this up, get some tax savings now, and help to build that nest egg for the future. All right, check out these credits and exemptions, because for those of you in Vermont, this can really play in to reducing your tax bill and how much you owe each year. Who's doing your taxes?